Good afternoon, everyone. For those of you who don't know me, I am Lanisha Lightborn, the Business Development Manager for Asset Management and High Net Worth Services at the Bermuda Business Development Agency, also known as the BDA. The BDA is an independent public and private partnership, and our focus is on promoting the jurisdiction and encouraging economic development and inward investment. We have teamed up with AIMA for a three-part series of Lunch and Learn webinars. Today, we bring some of the jurisdiction's experts to discuss the ongoing development and offering of Bermuda's investment fund industry. Thank you again for joining us today. I hand it over to Sarah now.
Thank you, Lanisha. Good afternoon, everyone, and welcome to what I hope is going to be a very informative next 30 minutes. The panelists hopefully will turn on their videos so that you can see them in a moment. My name is Sarah Demmeling. I am chair of AIMA Bermuda and a partner at Walkers, where I specialize in funds and investment services. I co-lead our reinsurance and ILS practice. I'm absolutely delighted today to be joined by a very esteemed panel. We have Greg Wachowski, President and CEO of the Bermuda Stock Exchange, which is a globally recognized exchange. It's the world's largest offshore, fully electronic securities market. He's also the board member of the World Federation of Exchanges. We also are joined by Ariane West. She's a director of structured finance at Nephila in their climate unit. Nephila Capital is the largest insurance and reinsurance linked fund manager. They're based here in Bermuda. Ariane focuses on the origination of new weather and climate risk finance and investment opportunities, as well as structuring of transactions. Finally, we have Gokul Sudarsana, who's a director in the actuarial risk and analytics practice in Deloitte. He has extensive actuarial and risk management expertise, spanning pricing, valuation, capital modeling within insurance, reinsurance, and banking. So we have a great panel. We have a lot to talk about on the topic of insurance-linked securities, otherwise known as ILS. We'll aim to explain what the asset class is, why it is seen as a diversifying asset class, what are its ESG qualities, and we'll touch on valuation techniques. If you have questions, there is a button. Please feel free to submit your questions. To the extent we can cover off today, we will. If not, we will capture it afterwards. So Greg, if I can start with you. What are insurance-linked securities? Can you give listeners a sense of how big the market is and what is the role of the BSX?
Or I just have to, can you hear me okay, Sarah?
I can, yes.
Okay, perfect. So thank you very much for that introduction, and thank you all for joining us this afternoon. And it's unusual that we're presenting in this format, but we are doing that. And we hope that you're all doing well and doing as best you can in these unique circumstances. So for the next several minutes, what I'd like to just go over with you is a broad discussion about what ILS is, and then give you some ideas of the market size and kind of why ILS has actually come to be a very interesting and exciting asset class. ILS, as we deem it, insurance-linked securities, is nothing more than transferring the risk of a company through a special purpose vehicle into a capital markets product that is consumable to the capital markets and more easily to be invested in by the capital markets. So this is why we have seen more and more professional investors being able to participate in the insurance industry through these structured products. When we talk about ILS, we talk about it as, I guess, a broader asset class, but there are several components of it which we deal with quite frequently here in Bermuda and in the ILS world. They are predominantly collateralized reinsurance vehicles, ILWs, or catastrophe bonds. The size of the market overall, which includes all of those three classes, is about $100 billion US right now, and it's growing. If you were to look at the lion's share of that $100 billion in terms of the component of the asset class, then surely a collateralized reinsurance would be the largest component of that. where the exchange, the BSX, gets involved is we get involved because one of those three components is probably the most liquid from a secondary market perspective. And we do a lot of work supporting those. And those are the catastrophe bonds. And the catastrophe bond is basically, what it sounds like. It's a bond that will pay out if certain triggers are met as to why the capital was raised for that bond. The size of that market right now stands at about 41 billion US, which is, and it's growing yearly. In terms of that 41 billion here on the Bermuda Stock Exchange, we have about 38 billion of those securities listed, which represent about 469 ILS vehicles. Even in this uncertain time, we're still seeing this industry, continuing to build momentum for 2020. 2020 was already an interesting year, but in terms of growth, the issuance for 2020 has reached to about $7.2 billion of new structures coming online, and of that, we have at the BSX about 6.4 billion, or 91 securities that have listed since the beginning of the year. So that gives you kind of the size of the market, and it's a growing market. It's growing in terms of its regional coverage, regional diversification, the types of risks that are actually being securitized and transferred into the capital markets. And we can talk about some of that later on in the presentation. We do kind of talk a lot about, ILS is something that's new, that's all of a sudden, popped up, but it isn't new. And ILS securities have been around for many years, and since the 90s. But back then, investors, and I think my co-panelist Ariane will talk a little bit more about the capital market attributes to investing in these securities. But back in the early, the late 90s and early 2000s, the markets were bubbling along. So the institutional capital market players weren't particularly interested in learning more and more about, a new asset class that had a lot of nuances that they weren't familiar with, because they could find yield in places that, they were more familiar with. And then pretty much right around the advent of the global financial crisis, when credit markets seized up and professional investors were looking for yield, the ILS asset class became very, very interesting to these professional investors. So from that point forward, we started to really see an acceleration in a lot of really key things: standardization, understanding of the products, the consumability of the products, the ILS products, by the capital markets, and ILS securities being a very sought after, portfolio balancing kind of investment. So, it's been a very exciting several years. I mean, of course, Bermuda is the third largest reinsurance market in the world. So from an innovation perspective, we had all the kind of primordial links here to kind of, support and accelerate the momentum in the ILS space. And as a result, our jurisdictions really kind of evolved as the center of excellence for the creation, support, and listing of ILS securities. So I know that my co-panelists are going to talk a little bit more about some of the intricate details of these securities. So Sarah, thank you very much for that, and I'll turn it back to you, please.
Thank you. That's great. That's very positive story to start. Excellent to hear that the year has started well, considering that the rest of the disasters that have been going on the last couple of months. Maybe Ariane, if I can turn it over to you, touching on that, the recent volatility that we've seen in financial markets, how have ILS products fared? Are they correlated? Is the correlation there? We can't hear you. Are you on mute?
There we go.
Thank you.
Sorry about that. So one of the key qualities of insurance-linked securities is their low correlation to other financial investments. So that includes equities, corporate and municipal bonds, treasuries. So stable performance of insurance-linked securities, including catastrophe bonds, collateralized reinsurance, industry loss warranties. This stable performance during high times or times of high market volatility has been proven out over time, and recent months have been no exception to that. So March 2020 saw returns on equities drop by 12.4%, that's the S&P index, high yield bonds by about 13%, commodities up around close to 30% drop, and investment grade bonds also a 2.3% drop was the index level. And cat bonds, this is based on the Swiss Re Global Cat Bond Total Return Index, they saw a drop of only 1.8%. Now, anecdotally, it's been observed that a lot of that decline is likely due to trading out of cat bond positions in the secondary market in order to source capital for margin requirements or opportunistic buying in other asset classes where the dislocation's been more severe. So I think we should really see that as another positive outcome, in that the secondary market for catastrophe bonds has matured enough that they qualify as an alternative asset class that has sufficient liquidity to support capital flexibility needs. So although the market has significantly rebounded during April and May, overall it was a very positive showing for ILS as an asset class, and it recalled the performance of ILS in the wake of the 2008 financial crisis. So that's when catastrophe bonds and ILS demonstrated stable, non-correlated performance, which at the time that attracted the attention of the investment community, and arguably it set the stage for the significant and the steady growth that we've seen in the asset class over time since then. So the basis for these non-correlated returns is the link to insured risks. So that's generally peak natural catastrophe risks, which for obvious reasons have no link to events in the market or broader political or economic indicators. As other types of risks become more common in the ILS sphere, for example, mortgage insurance risks, there may be more variability in this profile, but for the time being, peak natural catastrophe risks really are a dominant peril in terms of the overall ILS asset class, and so that really supports this non-correlated feature. So for these reasons, I would say insurance-linked securities, they've gained recognition as a diversifying non-correlated alternative asset class, and the market's seen large institutional investors consistently allocating a percentage of their total portfolio, often in the range of 2 to 5% to the asset class as a diversifying element.
Okay, excellent, thank you. I think everybody, when they hear about ILS, they hear about non-correlated, so that was very useful explanation, thank you. Gokul, turning to yourself, in your firm's role, whether it's auditor, loss reserve specialist, we've touched on some of the ILS products. What are you seeing, and are you seeing a growth trend?
Yeah, thank you, Sarah. So certainly through our role in the audit world, as well as supporting specific transactions, primarily through claims review or loss reserving services, we do see a lot of the market, and kind of through that lens, certainly there's a growth in the asset class in terms of the scale of transactions which Greg had touched on, and also the scope and breadth of risks that are covered, kind of moving away from just the peak natural catastrophe risks that Ariane mentioned and into the broader insurance market. So to restate the obvious, certainly catastrophe risk transfer continues to be a proven cornerstone in the market, and more and more sponsors are looking to the ILS space as a efficient capacity provider for those peak nat cat risks. But one interesting trend in that market is when you think about natural catastrophe, conventional cat bonds by design, they are looking to capitalize low frequency events, maybe event driven or per occurrence type risks, which are rare to trigger by nature. So from an investment perspective, the return profile is quite debt-like, and obviously that debt tends to be uncorrelated with the broader financial markets. in terms of innovation in that space. And I think this speaks to the widespread acknowledgement and adoption of ILS as part of a diversified investment portfolio is to look at going lower into the reinsurance tower. So if you look at the capital structure of an insurance company, you have your peak nat cat risks at top layer, but kind of moving down to more of the mezzanine layers to earn higher returns commensurate with that risk, and getting more of a hybrid or equity-like profile for your insurance-linked returns that's still broadly uncorrelated for the reasons discussed. One of the other trends we're seeing is that, of course, it doesn't just apply to property catastrophe risks, but applying the ILS concept more broadly across other lines of business in the insurance market. So we've seen this concept of securitizing underwriting risk applied to pretty much any line of business you can imagine in the casualty side, specialty side, even in the life and health space. And to that last point in particular, I think one particularly innovative product that I should mention is the use of a reinsurance sidecar as a particularly innovative way of taking on insurance-linked securities, insurance-linked risk, into your portfolio. So this is where an investor can sit alongside a reinsurer and take a quota share of either a broader portfolio or a specific block of business. And I think that's quite interesting and innovative way to take on insurance-linked returns. It's not just the pure underwriting risk that's being securitized, but insurance and reinsurance capabilities in general. So you benefit from some of the other capabilities in the insurance space, for example, claims handling from a casualty insurer, or asset liability management on the life side. And kind of last but not least, I will say the structures that are available are quite flexible, and particularly when you're looking at the collateralized reinsurance market, where a lot of the transactions are privately placed, it's quite easy to transform pretty much any format of reinsurance treaty into an ILS product. So really there is no theoretical constraint into what can be securitized and offered to the capital markets. And as the market evolves and becomes more established, I think you'll see a lot more of these structured, innovative ILS transactions come to market with more frequency.
Thank you very much. Half an hour is not enough to do justice on this subject, but I think we're giving people, for those that aren't familiar, a taste of all of the key structures, and that's excellent. Thank you. Moving tack a little bit. I don't want to devote the whole panel to ESG. However, given the growing importance that it is presenting now for investors looking for sustainable and responsible investing, maybe Greg, I can put it back to you. Do you see ILS being a part of this growing and future trend?
Yeah, definitely, Sarah. We have, and the reason why the BSX has gotten involved in this is, as you mentioned earlier on in intros, the BSX is a full member of the World Federation of Exchanges, and I sit on the board representing North America of the World Federation. And in 2019 and 2020, the agency, the organization as a whole, really started to dedicate part of its mandate and one of its priorities for the organization to ESG issues. So that's kind of at the capital market side and in terms of companies that list. But BSX, we feel strongly about ESG and providing a platform for ESG investment. And when we started looking at some of our securities that were listed, of the 1,000 securities we have listed, ILS forms a huge part of those that are listed. And last year, several European pension funds actually did deem ILS securities to be ESG compliant because some of their attributes in terms of community reconstruction and some of the positive things that they do in terms of putting communities back and companies back and things back to speed after a catastrophe. So that really was kind of a huge shift in how the market looks at ILS securities, and really opens the asset class to a whole new demographic of investor who might be a socially aware and socially conscious investor. There's many funds, dedicated funds, that do target those types of securities. So that was a really big development. And overall, what I think ILS does do as a mechanism, it really does provide capital to provide insurance coverage into places that typically are not very well covered. So we talk a lot about, you know, the protection gap, the underinsured, whether industries or geographies or cities, et cetera. And just having more consumable products that are consumed by different demographics, introducing more capital just really helps to provide more resources into the solution to narrow the protection gap. So, you know, we thought that we found as the BSX, it found this a massively exciting development for the asset class.
Excellent, thank you so much. Ariane, not surprisingly, we can't have a conversation on ESG without having Nephila Climate. I know the UN's, one of their sustainable development goals is taking action on climate change. We'd be very interested in your thoughts on the subject.
Sure, absolutely. So I think that ILS and the broader insurance and reinsurance industry in general, in terms of what they can contribute towards the sustainable development goals or the achievement of the sustainable development goals, I think, you know, it could be quite pivotal in that not only climate action, which obviously is, you know, near and dear to my heart as part of Nephila Climate. You know, one of our core products is renewable energy risk transfer products. So that, you know, goes towards the sustainable development goal with regard to affordable and clean energy. But I also think some of the other sustainable development goals, so sustainable communities and cities, industry innovation and infrastructure development, and even something such as the elimination of poverty. I think that reinsurance, ILS, and then reinsurance more broadly plays an important role in terms of supporting sustainability, resilience amongst communities and cities, which feeds into all of those goals. And I think insurance and reinsurance and ILS, particularly as it brings to bear the attention and the discipline of capital markets investing and pricing and really putting a valuation on those types of risks, I think in a market-based system, it's particularly important in order to make progress that can gain momentum and be sustained over time, and that's market-driven, as well as looking to governments for leadership and regulation. So I do think that there's a very valuable role to play here, and ILS bringing together the capital markets and the insurance industry to make some of those costs that have historically been treated as economic externalities to really crystallize the value of those in order to support the development of more sustainable solutions, I think, you know, can really be a potential game changer for the climate action goal.
Fantastic, thank you. Gokul, maybe we could finish up with you. Understanding risk and correctly pricing risk in this market obviously is key. What are the valuation techniques that you have to deal with that you see?
Yeah, thanks, Sarah. So I think, yeah, certainly the need in the market as a whole to mark your positions fairly frequently is a prerequisite to maintaining an efficient and liquid marketplace for any type of security. And I think the ILS community has built up robust techniques to perform kind of fair valuation as well as initial pricing on a basis that is very comparable to how capital markets in general looks at any type of security. So I would describe the technique as, you know, bringing together the capital markets techniques with which the audience should already be familiar, and really marrying that up with a lot of the risk modeling and actuarial analysis that the insurance and reinsurance industry applies in their measurement of insurance liabilities in general. So, you know, obviously this becomes quite nuanced on a case-by-case basis given the variety of structures that we've talked about. But you can think of it as you know, a very comparable and analogous to how any sort of bond works. And we'll take a vanilla catastrophe bond security as an example. You know, what happens kind of at initial pricing, we'll look at what is the frequency and severity of a particular event happening? And if we're using an example of just a 1-year catastrophic cover for a specific region, say, a hurricane in Florida, what you're really looking for is, what's the frequency of that hurricane happening? And, just put it in capital markets terms, that's, what's the probability of default, so to speak, for any sort of bond. And you'll run your models as well in terms of severity of that event affecting the insured business. So you'll look at overlaying your specific portfolio and exposures to that particular event to determine what would be the magnitude of loss sustained in that scenario that a hurricane were to occur. So, similar to a corporate bond market, we'd call that your loss given default. So there's a lot of analogous concepts there that you can match up to the corporate bond space and really drive that analysis and provide a fairly streamlined comparison between how an ILS security moves versus how the corporate bonds market moves. So that'll help you determine your expected loss, and similar to expected credit loss on a bond, as I mentioned. And the other item to consider then is what is the risk premium charge on top of that expected loss. And this is no different than a credit spread above your expected default cost on a bond market. So it's driven by market dynamics, transaction volumes, et cetera. So you can kind of see what's the multiple being traded on in a market above that expected loss, similar to again, like I said, how credit spreads work. Now, obviously, that's that time one, and say you run your analysis, and for the purposes of the example, you'll have 3% expected loss, and say there's an extra 3% premium on top of that. So when put it back in bond terms, you can talk about a par value of 100 being traded at 94 as the initial book value, so 6% discount, and then that obviously will get pulled to par as the bond reaches maturity. In this case, the value driving across from the initial book value to par is obviously linked to the catastrophe rather than the default of this underlying bond, whatever it may be, but the concepts are fairly analogous again.
Oh, I think you may have muted yourself. I can't, there we go. Can you try again? Greg and Ariane, can you hear me?
Loud and clear, Sarah.
Okay, Gokul, thank you so much. Oh, there we go. Thank you so much. Sorry, we lost you just for a second.
Okay, can you guys hear me now?
We can, yeah.
Okay, yeah, I think I was mostly finished anyway, so we'll continue on in the interest of time. Go ahead.
Okay, so thank you. Half an hour goes very quickly when there's so much to talk about. Maybe if we could just close with a question, and I'll throw it out to each one of you. Why Bermuda for ILS? We've touched about the asset class, but if you could maybe give your thoughts as to why Bermuda is seen as a leader in the field. Ariane, let's start with you.
Sure. I think Bermuda just has so many attributes that support this industry and support innovation in this industry. Obviously, the BMA has just built up an excellent track record and internal expertise in terms of supporting this market and regulating it to a world-class standard. I think that's really important. I think that just the critical mass of risk carriers on the island, just is only really matched in a couple of other places in the world. And I think just overall the ongoing leadership that the Bermuda market shows in this area, I think really, really supports those of us who are doing business here and looking at ways to develop and innovate and, push risk transfer forward.
Thank you. Greg, maybe your last thought.
Yeah, no, thanks, Sarah. I think Ariane really kind of hit the nail on the head with that. I mean, insurance is Bermuda's bread and butter. It's been for decades. So Bermuda has actually worked through many different cycles, in the industry, and has continued to innovate with, products that were really relevant and consumable by the global marketplace. And it's no surprise that, as a new form of capital sourcing started to develop through ILS Securities, that Bermuda, wasn't well positioned to kind of look forward and see how that was going to transform the industry. And it transformed the industry. It did. I mean, when we first started with this, we talked about, third-party capital. Then we talked about different terms, and now it's called partner capital. So, ILS isn't this new thing. It's a partner to the traditional space. And, and I just think the Bermuda's longevity and its infrastructure, which creates a kind of a Silicon Valley effect, is just kind of the natural home for innovation in the insurance industry. Thanks for that, Shai.
Thank you. Lanisha's popped up, so I think our time has come. So I'm going to take this opportunity to say a huge thank you to all of you. It's a great job to squeeze that into a very short time. Hopefully for the listeners, you've taken something away, you've learned something new. And I hope you'll join us next Thursday for the final series of the AIMA BDA webinars. It is going to focus on Bermuda's role in the digital asset space and reviewing other hot topics, including an update on economic substance. So thank you, everyone. Turning it back to Lanisha.
And I would like to thank all of you for an informative and insightful discussion today. I'd especially like to thank you, Gokul, Greg, and Ariane, and especially you, Sarah, for moderating. For those of you interested in keeping up to date with developments in Bermuda market, I encourage you to visit the www.bda.bm website, follow us, and make sure to sign up for our newsletter, The Bermuda Angle. And please do not hesitate to contact myself if you have any questions in relation to today's webinar. My email is on the screen, and the team and I would be happy to respond to any inquiries that we get. Thank you all again, and have a Bermuda-ful day.
Thank you.